Raising Cane's is rapidly becoming one of America's most popular fast food restaurants.
Y'all know what time it is. It's Cane's o'clock.
The chicken chain ranked 33 on restaurant tracking firm Technomic's top chains list in 2021. 3 years later, that number jumped to 18, surpassing KFC. It's also bigger than Wingstop. And sales have more than doubled in that same time period.
Everybody likes to think that Nasil is this emerging brand, but really they're becoming one of the largest players in the category.
Raising Cane's menu is simple: chicken, fries, Texas toast, and coleslaw. That's won over the US consumer.
We do not get into value play. We do not get into limited time offers. When our customers, when they pull into the drive-thru, walking through the doors, they immediately know what to expect.
So how did Raising Cane's become so popular? And what's in store for the chain moving forward?
The Raising Cane's in Times Square is one of the busiest quick service restaurants in the world. Yeah, you heard that right, the world. Last year, the company said it did $25 million in sales. For reference, Chick-Fil-A's busiest US franchise did around $19 million in sales last year. And McDonald's busiest did around $20 million.
It is a large restaurant. It is in the corner of Times Square, overlooks where the ball drops. But we saw that as a huge opportunity to showcase our restaurants to millions and millions of tourists who walk around that restaurant every day.
Raising Cane's first opened its doors in Louisiana in 1996. It's named after founder and CEO Todd Gray's dog. Over the past decade, the chain has nearly quadrupled its store count.
Doesn't matter if it's an urban setting, a location in Times Square, if it's a suburban drive-through location. They've been successful in each one of these type of locations. And I think that's kind of one of the parts of the story sometimes miss, is it's not just about unit growth for this company. It really is about picking up those incremental visitors when they open up new locations and continue to build that base organically.
Let's say it's a retail trade area that has 5 high schools, a religious establishment, etc. We have mapped out corner of A and B is where we want to be, and preferably on this northeast corner. We will wait it out. We will wait it out to get that location.
In 2024, Raising Cane's reported a nearly 11% increase in foot traffic at its existing locations, not considering restaurants opened that year.
3, 2, 1, Raising Cane's!
When taking into account new openings, the company increased foot traffic by double-digit percentages between 2021 and 2024. Rapid expansion has allowed traffic to far outpace competitor Chick-Fil-A and the overall quick service industry. The company has grown its US sales to nearly $5 billion. Hadavi says one of the key factors to its success is the simplicity of its offering.
They do a great job, keep a very streamlined, simple menu that allows for greater throughput during the drive-through. From a drive-through perspective, they're one of the most efficient operators in the business. Really, Chick-fil-A is the only one that's even close to that. But I think that undersells the rest of the business too. I think the viral marketing this company has done has really set them apart too. So really firing on all cylinders.
Happy National Iced Tea Day. This is Iced Tea in Times Square, about to give out some iced tea.
I'm gonna try to steal my Cane's cardboard cutout.
The company's TikTok page gets millions of views from social media posts with celebrities and athletes promoting the brand.
Tastes like victory.
The company did not share how much it spends on celebrity partnerships. Two of the largest chains in the world, McDonald's and Starbucks, have been under scrutiny by investors as of late. Despite generating billions of dollars in sales and having tens of thousands of stores, there's pressure to keep hitting growth targets. Raising Cane's doesn't have to worry about that.
We use a traditional line of credit to be able to fund our growth and have the capital that is needed to grow our business. And we take a very long-term viewpoint in the business, and we have no interest in going public or taking private investments, etc. at this stage at all.
While investor capital from going public can help fund expansion, Wall Street keeps a close eye on company performance, as it must report earnings every quarter.
We're not saying, okay, we need to hit this number on this quarter, if not, there's gonna be a problem. That is not it. Our goal is, where our customers are, we wanna be able to serve them as quickly as possible, but we will never compromise on our standards.
The chain has posted 64 consecutive quarters of same-store sales growth. When Kumaran joined back in 2014, the company was franchising about 25% of its US locations. Since then, it has taken back control of most of these restaurants, with just 3% of them currently franchised.
to just keep things company owned and self-fund that expansion does give them a greater element of control. They've got a good oversight of all their locations. It allows them to maintain that operational excellence that they've gotten this far.
We don't have a large ownership group that we need to go ask permission to, or when we feel like it is the right thing to do, and when we get to that conclusion, we can quickly execute. And that has been a huge riding force for us.
Raising Cane's success over the past few years has coincided with explosive popularity for chicken. It started back in 2019, when Popeyes' spicy chicken sandwich kicked off what effectively became known as the Chicken Sandwich Wars. By 2021, demand for chicken from fast food chains was so high, it was putting pressure on supply.
The chicken category as a whole has been really driving most of the growth across the quick service and fast casual categories the past couple of years. And I don't think you can attribute the success to just one factor. I think there's many things at play here. Yeah, I do think you've got a lot of strong operators in this category. I do think you've got a lot of invention, a lot of newness and creativity.
In a 2024 earnings call, McDonald's said chicken had grown to represent $25 billion in annual system-wide sales. That was on par with its beef sales. It introduced the Chicken Big Mac for a limited run last year. The fast food giant recently put crispy chicken strips on the menu as the first permanent addition in 4 years. Even Taco Bell has gotten in on the action with a selection of limited-time crispy chicken items.
When something does well, someone does well, everybody jumps on that, whether that is Dubai chocolate being the hype of the moment or chicken, it all works out the same way.
Nonetheless, quick service chicken is a competitive space to be in, with almost every fast food chain vying for market share. Plus, going all in on chicken does create some risk.
This chart shows the volatility around the price of chicken over the past decade, as producers contend with swings in demand and the cost of feedstock.
We do strategic things like forward buying where we can. For example, the oil and things like that, you could buy futures a bit. When it comes to poultry, our priority always and always is the highest quality product that we can procure to serve our product. We are buying from pretty much every single poultry supplier in the country today, and we'll continue to add more. As long as they have the highest quality chicken, we are there for them.
Raising Cane's has laid out its ambition to be a top 10 U.S. restaurant brand, with $10 billion in system-wide sales and average sales of $8 million per restaurant.
All indicators say that we should get there before the end of this decade. So somewhere around 29, 30, we should be there. Hey, if it takes 31 or 32, so be it. For us, it's not a fad. For us, it's a lifestyle.